And good morning to you, our Exit Strategies Radio family. Hey, thank you so much for being with us today. We are always counting it a privilege to quote unquote be on the right side of the dirt. If you're listening to this show, you are, sir or ma'am, on the right side of the dirt. So look here, we want to enjoy it. We want to fellowship. We want to have a great time. Guys, we want to have some real conversations. That is what we're always going to do. And we're going to talk today a little bit more about how you can build, create, maintain, and establish, if you will, your legacy. And that is right on par with us today with our guest. So we are very, very, very privileged to welcome to the Exit Strategies Radio Show. Welcome back, because he is a friend, he is a contributor, he is a true professional and an expert, guys, an expert. And look here, we always going to bring you the best. So an expert in his field, and we're grateful for him to be here with us today. So no other ado, no other fanfare. We're going to jump right into it. Jerry Garner, thank you so much for being here with us. How you doing this morning, sir?
I'm doing very well. Thank you for that nice introduction there, Corwin.
Well, look here. I charge for that normally, but today it is a. I won't call it a freebie, but it is a promotional item or event today. How about that?
That's awesome.
Jerry, if you would, please introduce yourself formally to our Exit Strategy Radio Show family.
Yes, sir. My name is Jerry Garner. I'm an employee of Mutual of Omaha Mortgage.
There it is.
Been in the mortgage space since 1992 after graduating from East Carolina University, majored in business. I spent the majority of my professional career in the traditional mortgage world. And then back in 2004, we relocated back here to Charleston. I live on James Island. And I started working specifically with baby boomers and retirees. There's a lot of opportunities that we have out there to serve our communities. And, there's nothing better than finding the right house for someone or allowing someone to age in place, stay in that house because for most of us, our income is fixed, especially if you're retired. You got that Social Security check, you got that little pension, maybe if you're lucky. But expenses keep going up. Property taxes, health care, you name it. And so we all have loved ones, whether it's immediate family, whether it's friends, whether it's people in church. And so that's kind of my why. There's Corwin, you and I talk a lot about what's your why. My why is just trying to help people make sure that they can live a comfortable retirement. So my title, I was a loan officer for about 20 years. Mutual of Omaha, they pegged me as a home equity retirement specialist. How about that?
Hold on. Home equity retirement specialist, HERS, right?
That's it.
I love it.
Hers.
I love it. So you pointed out and said something there, and for our listeners, guys, we always want to have a real conversation, and many of us, and I, my wife knows this stuff. She talks about boomers, baby boomers, all that stuff, generations, Gen X's, Y's, and all that stuff. I don't think nothing about any of that. I know they're out there. I don't know what demographic, age group, and all that stuff they are. But when we start having this conversation right now, we're going through, a lot of us are going through how to help our parents as they retire and, in their, quote unquote, we call it the golden years, but whatever you call it, however you look at it, those years after retirement when the income has changed. And some, we're going through this right now. You have a parent who may be elderly or sickly, we got one that's falling all the time. I mean, like 5 days, 4-5 days in a row, like they going down and somebody got to pick them up off the ground, but, and we say it jokingly, but it's a real conversation. So how can you, as a HERS, I love that. how can you help people to be able to, to age in place, if you will?
All right. I'm gonna, as Corey and you and I know, we just shoot straight. So I'm gonna just shoot straight here. So, um, as a home equity retirement specialist, the main product that I assist with is called a reverse mortgage.
Mm-hmm.
But the truth be, the term reverse mortgage is slang. There's no such thing as a reverse mortgage. It's been labeled that. So for those out there, if you're friendly with Google, the program, the product that we Mutual of Omaha have, it's called a home equity conversion mortgage. Home equity conversion mortgage, HECM. The home equity conversion mortgage was created in 1988 by HUD, the government. So it's a government program that's been around now, for over 30 years.
Mm-hmm.
It's misunderstood, but the primary purpose of the home equity conversion mortgage, and we'll call it a reverse mortgage because that's what most people label it.
Mm-hmm.
The number one primary use is to allow you to age in place. Now, what does that mean? All right. There's somewhere between 10 and 12,000 homeowners a day in the United States turning 62. Why do we track that? Because when you turn 62, you're eligible for Social Security income. All right. So everybody that I work with, you have to be age 62 or older. If you're a married couple, only one of you needs to be age 62 when you would qualify. But if you're age 62 or older, you're either planning retirement or you're older, like my parents, and they've been retired for a long time on fixed income. Mm-hmm. The problem that many of us have is we have parents that we're living longer than ever before, Corwin. Back in the day, grandparents, great-grandparents, man, you had a heart attack and you grew your wings and you flew off. The Lord called you.
Yeah.
Today you have a heart attack, they send you to the hospital, put stents in, you have bypass, they send you home, and you live for another 20 years.
Yeah, going through that. Yeah, exactly. Hey, hold on. We gonna put some radiation in your heart and close up some arteries and close up some veins or something, so your heart will be okay and stop pitter pattering. What?
Yeah. So what in the financial world they call that longevity risk.
Yeah. Okay.
It means we have the risk of living a long time. I was on the phone this morning with a lady. Her husband just passed away on September 21st. Mm. She's 71 years of age. Mm-hmm. She's concerned about living a long time because her mother, now she's 71, her mom's still alive at 96.
Whoa.
So think about that. She's got 25 plus years. Yeah. And so for many of us, I don't care whether you're 62, 82, or I'm 51, the majority of my asset, my worth financially is in the form of equity. Mm-hmm. So we got listeners here. Maybe it's an adult child. Maybe it's the listener themselves, the baby boomer, the senior citizen, whomever's listening is, if you've got all this equity, it's tied up in the walls. Mm-hmm. So there's only two ways to pull this equity out of the house. Yeah. One, you're an expert at it. You sell it. Sell it and you downsize, you right size, you move in with family members. That is a valid option. You rule the roost in this market. You can help people. They want to sell their house. Maybe it's not conducive. Maybe the master bedroom's upstairs and they can't get upstairs anymore. Well, they may need to sell that house and find a smaller house. Yep. Well, some of us, like my mom and dad, and maybe your mom and dad, they ain't leaving this house. They've been in this house since 1942. They are not leaving the house. Yeah, so what's that say? Exactly. So what's the other option? So if I'm not going to sell the house to pull the equity out to help pay bills and live off of, then you have to go get a mortgage. Mm-hmm. And mortgage can be a 4-letter word for people because there's payments, there's interest. The process of getting a mortgage can be daunting. Mm-hmm. So sell the house, but I don't want to go get a mortgage because then I got this payment I got to pay back for the next 30 years. Mm-hmm. All right. So here comes the home equity retirement specialist from Mutual of Omaha. We're like, all right, there's a third way. There's a reverse mortgage. So what does that mean? Number one is you get to stay in this house. That house that you're in, you get to stay in it. The deed stays in your name. You maintain ownership of it. It's your house. But we're going to allow you to pull equity out of that house, either monthly or you can have a line of credit. And you can use that money any way you want to. You can use it to pay property taxes, home insurance, health care. You can use it to wheelchair ramps. You can use it to modify the house to make it age in place conducive. So you're going to maintain ownership of your home. You're going to pull the money out tax-free. Does not impact Social Security, does not impact your Medicare. You can spend it however you wish to age in place. In these reverse mortgages, which are insured by the Federal Housing Authority, they do not require monthly payments, period. So you're going to get a statement every month. You're going to see how much you owe, but there's no payments. Corwin, there's no term. So you can take this money out, spend it however you wish to age in place, live comfortably in your home. And the loan is paid back when either A, the homeowner decides to sell the house, and they can at any time. They can sell it. There's no prepayment penalties. Or when both of them pass away, the house is going to go to the estate. Typically, that's the kids. The kids did have up to a year to sell it. We get paid back, and whatever equity's left goes to the kids. That's aging in place.
That's it right there. That's awesome. That's awesome.
Now, real quick. The number one use of an aging in place is to eliminate a mortgage payment.
Yeah.
So if you're 62 years of age or older and you're making this large mortgage payment, you might be able to refinance into the reverse mortgage and eliminate the monthly payment.
That's huge. That's huge. So for our listeners, guys, so first of all, Jerry, give your contact information to our listeners.
Sure. My easiest way to reach me is direct phone, 843-670-4332. And my email address is jerrygarner@mutualmortgage.com. Again, that phone number is 843-670-4332.
Now, Jerry, you can do loans where at?
All 50 states. All 50 states.
So anyone in the continental, we got some people listening to us overseas as well. But guys, if you're in the continental U.S., hey, look, I say continental, matter of fact, not even continental, because look here, we got Hawaii and Alaska, and I want to travel to both of them places.
And Puerto Rico.
And Puerto Rico. Oh, that's a song. So if you guys, please reach out to Jerry so he can get this information to you, because it is valuable. You could benefit from this knowledge, and most importantly, I'm pretty sure for our listeners, guys, your family can benefit from this as well. So, Jerry, look, we've come smack dab up on our break. Let's put a pin right there, and we want to come back, guys, and we want to talk to you about, how you can leverage this HECM, this home equity conversion mortgage. The HECM, as we know it is in the real estate field, how you can leverage that to purchase a home. You guys hold tight. Congratulations to this week's Realtor of the Week for Exit Realty Low Country Group. None other than Mimi Eubanks, your country realtor. You can reach Mimi at 843-730-3327 or text My Realtor Mimi. That's MyRealtorMeme to 85377. Y'all give y'all country realtor a holler now. Guys, we are back. Second segment, Exit Strategies Radio Show. Guys, we're having a ball. We're having a blast. We have none other than Jerry Garner with us today from Mutual Omaha Mortgage. Look here. Hold on. Y'all, y'all Mutual Omaha, because y'all used to sponsor. I remember this as a kid. What was the show? Wild Kingdom?
Wild Kingdom, yeah.
Wild Kingdom.
It's coming back, Owen. It's coming back.
Is it?
It is. In 2022, you will have Wild Kingdom on Saturday mornings.
Oh, that is awesome. So look here, I'm gonna have to sit my son down in front of it and watch it, because look here, I remember as a kid, I used to look forward to it. Lions, Tigers, and Bears, man. Oh my. So look, thank you so much for being with us today. So guys, before the break, Jerry and I were having this conversation and talking about what many people know as a reverse mortgage. We know in the real estate industry as the HECM. So, Jerry, we're talking about aging in place during our first segment, but we want to talk about now how to leverage this same product into purchasing a new home. You guys can do that, right?
Yes, sir. Like we mentioned in the first segment, the original HECM, home equity conversion mortgage, aka reverse mortgage, was created in 1988. And it was solely for aging in place. Well, fast forward ahead in 2009, HUD allowed us to use the product to purchase a home, a HECM, a home equity conversion mortgage. And we'll look down here because I got some stats here. This is from the National Association of Realtors, which I know you know well. 38% of all buyers in 2020 was over the age of 55. 38%.
Wow, that's a lot.
There's 10,000 people a day turning 62. With the HECM for purchase, you need to be a 62 or older. So keep that in mind. If you're married, only one of you is 62. Three primary reasons people are relocating and buying houses. Number one, to move closer to friends and family. And we're seeing that right now at an incredible rate, whether they're down here for Bosch or Boeing or MUSC or whatever, they are coming, man. They're coming. So relocating. Number two, lower cost of living. I know our costs down here can be high, but you compare property taxes in South Carolina compared to some states in the Northeast, and it's mind-boggling. So they're coming down here for a lower cost of living. And number three, the weather. They're tired of shoveling snow.
Yeah.
All right. With that being said, the number one characteristic in which a buyer compromises: price. They don't think they can afford what they really want. All right. So there's three ways to buy a house. Generally speaking, three ways. Number one, pay cash. You find a house in North Charleston, the asking price is $400,000. If you got it, write a check for $400,000 and you own the house. Now, that's a lot of money to put into the dirt. I'm not a financial planner. I'm a home equity retirement specialist, but that's number one. If you pay cash, you don't have a mortgage payment. That's great. Most people, the majority of us, don't have $400,000 to buy that house. So what do the majority of people do is they're going to ask you, Corin, who do you know that can get a conventional mortgage? And so you send them to one of your contacts to get pre-approved for a regular loan. And they ask about your income and your assets and your credit and et cetera, et cetera. You put maybe 10 or 20% down on a house. So a $400,000 house, you put $80,000 down payment. You finance $320,000 for 30 years, and your payment's going to run you about $1,800 a month. So our listeners, our viewers, sitting there going, "Wait a minute, I'm on retired fixed income. That $1,800 a month ain't going to cut. Not for 30 years." So if you don't have cash and you don't want a mortgage payment for 30 years, then call when you say, "Hey, call my friend Jerry at Mutual of Omaha and ask him about the HECM, home equity conversion mortgage." There's no cost to get pre-approved. There's no obligation to get pre-approved. And so this is what the HECM does. The HECM allows you to put approximately 50% cash down. So if you're buying a $400,000 home, you bring $200,000. You're going to borrow $200 from me. So you're going to purchase a $400,000 home. It's titled in your name. You own it, homeowner. It's yours. And there's no mortgage payments. There's no mortgage payments. You're going to get a statement every single month. You can choose to make payments of any amount at any time. But as long as you or your spouse are living in this house, and Corin, I don't care if you turn 110, I don't care if the economy crashes, these are FHA loans. The Federal Housing Authority is insuring it. Because we talked earlier about aging in place in a house you've been in for a long time. But we also now talking about relocating in retirement. And once we get you into this new house, maybe with a kitchen you never had, maybe it's close to your church. Wow, we want to keep you there. So as you age in this new house after relocating, no monthly mortgage payments. We get paid back. Again, if you decide to sell the house or when you both pass away, the house will go to your kids. So it's a very good way to leverage that down payment to buy what you really want.
That's huge. Now, qualifying. The process is real simple to qualify, right?
It is. Now there's been a lot of, you may have some listeners, some viewers that, "Hey, I heard about reverse mortgages. I heard about it." And
everybody heard something, but don't know.
This is what's interesting. The first reverse mortgage was in the late 60s, early 70s with a saving and loan day. This is the wild, wild west. Well, the program went away. There was no reverse mortgage. And then in 1988, the government got involved and created the HECM. All right. So qualifying. If you're a married couple, one of you needs to be age 62 or above.
Mm-hmm.
The property you're buying has to be considered your primary residence.
Mm-hmm.
We do not credit score. I'm pulling credit. I'm just looking to make sure you kept your bills paid the last 2 years.
Mm-hmm.
So I'm old school core, and I'm pulling credit, and I'm going tray line by tray line. If there's a 30-day late or something on a credit card, all I need is a LOE, a letter of explanation of what happened. All right?
Okay.
So that is willingness to pay. Now, there's no mortgage payment, so what are we verifying? You still have to keep your property taxes and your home insurance paid. So I'm making sure you can keep those property charges paid.
Mm-hmm.
Financial assessment is you need $500 a borrower residual income, very similar to a VA loan. So if it's a married couple, I'm going to take your gross Social Security, and I'm just going to subtract out your property charges and whatever credit card payments you might or might not have. And as long as you got that $500 per borrower residual income, you qualify. So it's an easier process. We don't have that hard debt to income ratios, and we don't credit score. It's more common sense conversation, again, because all my borrowers are age 62 or above. 99% of them qualifying using Social Security alone.
Mm-hmm. That's huge. That's huge. So for our listeners, guys, this is where the opportunity, exists. Maybe you got a parent, as they are getting closer to quote unquote retirement, maybe, because my mom, is semi-retired. She retired, working, but decided to piddle. So she picked up, a job, working 1 day a week. Sometimes she works a little over if they need a little help, but she works about 1 day a week, getting Social Security and all that stuff. And I know as a child, as a son, my concern is, hey, is mom going to be okay financially? What's that going to look like in the future? So this is a product that I personally have said, okay, well, look, if we get to that point, then this is something that we're going to definitely have to consider and talk more in depth about, because if you need to take something out of the debt ratio, such as a mortgage payment, then and you qualify, this is it, and now, instead of you having to be concerned about trying to make a, maybe $1,000, $1,500, $2,000 a month mortgage payment, now you're able to live without that and still remain in the home. I mean, it's a win-win, right? So,
Yeah.
Give us a success story, man. Our listeners need to hear, somebody who has done this and just, had a great experience and in turn great result.
Well, I've closed a little over 3,000 of these HECM loans since 2004. That's a big number, but it's not about closing loans. It's about helping people and servicing the community. I did conventional mortgage for many years going, what's the rate? What's the payment? Bing, bang, boom, close it, you move on. The conversations we're having is more around family and friends and cash flow. The number one concern that our parents have is, I'm afraid I'm going to outlive my money and be a burden on my kids. Whether they're going to tell you that or not, and some of us have closer relationships than others with our family, but that's what they have while they're living in these beautiful houses that they're in. So the biggest success stories I have is, number one is when I get a call from a potential buyer. They're like, well, Corey told me to call you. My attorney told me to call you. And my family member at church told me to call you. I need to learn about the HECM for purchase. And so the idea was, when you don't think you can afford the Summerville, Charleston area, and maybe it's a brand new construction, there's these 55 plus communities. They're left and right now. But the average purchase price of these things is around $400,000. So I have a handful weekly of people calling in and saying, listen, I'm selling my house in, say, Ladson. I don't owe anything on it, and I'm going to walk away with $210,000. I can talk to them about taking that 210 and leveraging it to buy a brand new house, repair free, don't have to worry about maintenance, and they can live in that house comfortably without having a mortgage payment. I have free guides. So again, you can call me at 843-670-4332, and I can either regular mail you or email you a free consumer guide. It's 28 pages. with as little as a purchase price and your date of birth, I can run a custom proposal for you. Our world is different. Our interest rates come out every Tuesday, and it's the same whether you got really good credit or it's a little bit on the smelly side. Right now, we're sitting at 3.875. That's today. That could change. I'm just saying the rates are comparable to a regular. Again, we're dealing with some of the greatest generation in the world. Our parents, our grandparents, they paved the way for us. And this is a product. Is it right for everyone? No. And let me just talk real quick on it. There's no financial product, life insurance, stock, bond that's right for everyone. So it's not too good to be true. It's still a mortgage. Interest is accruing. So there might not be as much equity left for the kids on the back end of this transaction because you're taking all this money, you're buying a house, and you're making no payments. The loan is a non-recourse loan. A third of the people that call me, it's us. It's the kids. It's not mom and dad calling asking about a HECM. It's the adult kids that saying, listen, I'm in California with my work. My parents are still back in Charleston. I'm in Virginia. How does this program work? And they just want to make sure they understand how we used to call it downsizing. But what I'm seeing is they're moving down in square footage, but they're going up in price point. So we call it right sizing.
That's fair. And that's indicative of the market. I mean, pricing in the market is up. So therefore, trying to make a lateral move in this current market is very difficult. Very difficult and remain at the same price point. That's one of my personal experiences right now as well. As I've been, talking to and kind of looking at my own, situation. I have way more house than what I need. But to go down in size, I'm going to go up in price.
Right.
Oh wow. Okay. But so Jerry, look, guys, we had a great time here today. Jerry, thank you so much for being here with us.
Thank you.
One more time, your contact information for our listeners.
Sure. My email address is Jerry, Jerry, Garner, Garner at mutualmortgage.com. And my phone number, 843-670-4332. Give me a call, shoot me an email, and I'll reply with one of our free consumer guides.
Awesome. And for our listeners, guys, look, we're going to get Jerry's information, the consumer guide, guys, added to our website. So please check out exitstrategiesradioshow.com, guys, to be able to pull that information down. So we'll make sure we get that loaded there, or either hit our contact page and we'll get a copy. Make sure you get a copy over to you as well. So guys, look, we've had an awesome show. We thank you so much for tuning in, for listening. Jerry, again, thank you so much for taking your time today. And we're going to have you back real soon because we want to continue this conversation, guys, about how to help your parents to either age in place or position themselves appropriately for their retirement, for their future, for their quote unquote golden years, how to do that. And anyone who has any questions, please reach out to Jerry, reach out to us at the show. We'll make sure we get you connected to him. Again, Jerry, thank you so much. For our listeners, thank you. We love you. You know it. And
thank you.
Out in the streets. Y'all have a great day.
Thank you, friends.